Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome all of you here today on this May 4th. What is tomorrow? Cinco de Mayo. I know everyone get to bed early, so some of you like to celebrate that, as my family does as well. So just real quick, we welcome all of you. Hopefully you had a great weekend. We also have Rachel Dasher with us in the chat. Say hello, Rachel. And just real quick, remember that Rachel and myself, we do post educational content on X. Quick reminder there. And also a quick reminder that this class is being recorded, and I'll share with you the website that you can find that, and also the playlist for this class in just a moment. Now, just real quick as we get started, when we talk about trading with technical indicators, trading doesn't necessarily mean we can't invest. Indicators, when we talk about that, it could be, let's say, stock and or option examples. Now, it's very important you understand is that you could use all the indicators you want. At the end of the day, where the rubber meets the road is, what strategy are you going to use? Now, by the way, just so I kind of know where you're coming from, what is one of your, maybe two of your favorite strategies? Type that in the chat. Now, just real quick as we get started, remember the information we talk about here today is done for general informational purposes only. Also remember that options carry a high level of risk and are not suitable for all investors. When we talk about examples, we will do those on the Paper Money software application for educational purposes only. When we also talk about investing, investing involves risk. Without risk, there's no reward. So you got to be okay with the risk. The risk can change based upon the strategy. So it's very important to understand the strategy. And when we also talk about examples, we're going to talk about the principles of technical analysis and practices. Some of the indicators we're going to talk about are some of those kind of trusted and true indicators we talk about. You're going to be using some of the scripts here today. And we're going to look for examples of putting on some new trades and also some past examples. Now, today we've kind of had the key word is I'm going to use a plethora of data. Well, we've had a plethora of news here today, okay? So number one is probably what's hard not to kind of have seen a little bit is, there's been reports of Iran or a group of Iran people or et cetera, maybe shooting rockets over at the UAE. Brent oil, okay, not crude oil as much. Brent oil, we actually did see go up 6.5. If we close here, that'd be the highest close we've actually had in a while. So keep in mind on that. We also see when we talk about gas, take a look at this, and this is going to kind of relate to some of the things we're going to see on the charts. We see gas actually hitting some brand new highs. If we also bring up, let's say, the VIX, surely the VIX has actually hit brand new highs. Not so much. So the movements so far that we've actually seen are right now, they're in the commodity itself. Now, we're not saying none of the commodity stocks move, but we're seeing more of the movement in the commodity price. Now, when you look at the VIX, let's kind of zoom in on that. When we look at the moving averages, this is the whole moving averages, the 10 and the 20-day moving averages, they're still red. Decent sized candle here today. The one thing we would say on the VIX is the MACD has actually stayed above the zero line, okay, which means we're holding momentum. We just went through a bunch of earnings last week. We didn't see any big pop to the upside in volatility, which we don't want to see unless you're a bear. And this being able to stay above zero, it's showing that investors are still willing to kind of protect somewhat over some of these earnings. VIX here being 18 and 18.6. Now, the one thing we also do have to make mention is today is when you look at the rates, okay? If you look at these rates here, you're going to see that we're at 4.45. This last weekend, I was looking at some homes, and the amount of $2 million, $3 million homes in Salt Lake City, I've never seen it so high. I usually only see a handful, but I've never seen as many as I did this last weekend. Now, obviously, as that rate goes higher, now not everyone gets a mortgage, but if you did, those rates kind of ticking up, cost of borrowing becoming a little bit higher. Now, the one thing to kind of keep in mind is as that goes up, some of these stocks, particularly growth stocks, you get a higher borrowing cost. You get maybe the earnings to compress as you actually are paying a higher amount for interest. Keep that in mind. Now, also when we take a look at, let's say, the NASDAQ, we did see the NASDAQ actually make a brand new high here today. I know, I'm with you, okay? By the way, this move here in the last little bit has been, well, from low to high, Low to high move, don't worry. It's only been up 25% on the index. On the index. Okay? In 5 trading weeks. 25% low to high. I know what you're thinking. If I could have just grabbed half that, okay? Excuse me, 21.84% over 25 days. Okay. Now, if you take a look at that, you're thinking, I know you're saying, geez, if I could maybe just get the middle of that, that's the goal, right? Uh, unless you're doing buy and hold. If you look at the Sox also hit a brand new high. Percentage basis on that, low to high here. Well, this one might hurt a little bit. 50%. This is why we say comments like when people talk about trading something that tracks the index, or trading something that tracks an industry group, or trading something that tracks a sector, people think that these don't move. That is the farthest thing from the truth. And so you got to understand that these are groups of stocks trying to track a group of stocks. And so the biggest thing is here, there's been some big moves, but the moves actually haven't stopped there. The SPX, when we look at that, still consolidating. Friday intraday high there. We're still not seeing any breaching of that support level down around 70, 71 and a quarter. Okay. And you look at the Dow Jones. Okay. That's been the one that's been the most under pressure. But that one is kind of tied to the US dollar, and that US dollar trying to firm up a little bit here at a bottom here. And you look at the Russell and kind of finishing this out. We did see an intraday high on the Russell. Okay. Now here's the deal. Okay. You got to remember what I've been saying is news eventually blows away. In a couple days, week, 2, 3 weeks, people won't even remember about what happened. They're just looking at the chart. So when you get news that actually happens, like today, eventually people just want to look at the price. Okay. Always remember that. You guys remember when the U.S. Credit rating was downgraded? It was a big deal for about a couple of days. No one even talks about it. You remember the second time it was downgraded? It was a big deal for the moment. No one even talks about it. So that news eventually fades away to what did the chart do? Okay. Now, I think the one thing we also need to make mention, when you look at obviously the energy, not all energy stocks are the same. When we actually also take a look at something, let's kind of keep an eye also on utilities this week. Okay. Why do we care about these? Well, because if we start seeing a bid in these areas, what I mean by bid is people start pushing up the price. They're not yet. They're kind of still holding. When you look at the staples, they haven't seen a move there. And we look at, let's say, real estate, not seeing a move there. And if we look at healthcare, those 4. The reason why we care about these 4, utility, staples, healthcare, and real estate, if people start buying those, people are becoming a little bit more defensive. If you're bullish, you probably don't want to see that yet. Okay. If we see those go up, that usually means the markets are coming back down. Okay. Now, are there any questions just real quick before we get started? Scott actually says aloha. Scott, oh my gosh, it's less than a month and I'll be in aloha myself. Hopefully I won't get hit in the head with a coconut. Now, the biggest actually thing is any questions. Now, real quick, a couple of things that we want to kind of go over. Now, today, I want to kind of talk about settings a little bit on indicators. Okay. Now, as I'm just waiting to kind of see if there's any questions, but let me pull this up for just a moment. And the one thing that we kind of said before, and let's pull this up. So when we talk about some of the indicators, we like to look at some of these column headings. These really kind of give us a gist of what's going on. Now, the thing that we have seen consistently when we look at, let's say, the relative strength column, and I'll kind of rank that from top to bottom. This list right here, we're looking at the Dow Jones. And the one thing you'll notice as these loads is that there's a lot of red here in the different columns. The RS, for short for relative strength, over the last 5 days, 10 days, 2 weeks, 21, 1 month, 42, 2 months, and 63, 3 months. Now, what I made mention of is when you look at this, there's a lot of red on this. I mean, 60% of this is red. Now, you can have all the indicators you want, but you got to understand what it's telling you. Well, let me tell you what this is telling us, okay? What this is telling us is that there's a lot of stocks that are within the Dow that are underperforming the S&P 500. So first off, understand what is it telling you? That's number one. Number two, what does the investor do with that information? We'll tell you. Well, if you're seeing that a lot of Dow stocks are underperforming, now I didn't say all, a lot though. If a lot of stocks are underperforming the S&P 500, go look at the S&P 500. They're probably actually stronger than the Dow Jones, many of them on average. Now, those stocks that have actually been quite strong, Mr. Cisco, we talked about that. You've also seen Amazon, okay? Didn't really like it when the Amazon person said, hey, your wife ordered about blank number of packages in 1 month. You knew about that. And I was like, yeah, thanks for reminding me. Okay. Now that's not a recommendation. I wasn't very happy about it. Okay. But the biggest actually thing is here is we've been seeing that Cisco, we're still seeing it strong on multiple different time fronts in terms of relative strength. So is also Amazon as well. And you're going to see that Merck is actually going from a darker red, worst, lighter red, still pretty bad, lighter green, strengthening over the last 10 days, and also on the 5-day. Now, the big thing is actually when you look at also the Chevron, which we talked about, dark red, light green, light red, and then actually darker green. There's Chevron. Now, keep an eye on Chevron. Those have been actually quite strong. I want to talk about some different ones. Let's start with oil first. Now, what I want to do on this is I want to kind of make a list together. Some stocks that we might look at, the indicators, but also for the next couple days. I'm going to slide this over for just a second. Now, if you have any stocks that you say, James, we need to watch these this week, go ahead, and I'm just going to label today 5-4, and let me kind of mark a couple stocks that we might kind of keep an eye on this week. Now, number one is I'm going to put an Apple there. I'm also going to, obviously we just said Amazon. I'm going to also mention the Cisco. And if you don't mind, I'm going to punch these in pretty quick. Now, if I actually, let me see if I can't do that. No. And what I'm going to do is I'm going to type in MUTTWO, MSTR, Fortinet, obviously WDC, STX, PanW, FANG, okay, Marvell, okay, Intel. Gosh, it went up to 101. Did you see that? My heavens. Oracle, PM, Mo, Target, Google, SIBO, okay? SIBO, CrowdStrike, Coin, MPC, Valero, Phillips 66, CF, Moss, and Datadog. Now, here it is. Now, when we actually make this list, what it's doing is it's taking really the stocks that I just made mention of. Now, what do you notice? Well, I mean, I would get my darker sunglasses if I could, but I'm teaching webcast. Now, the big actually thing is the only thing that we see on this list is kind of underperforming a little bit. The S&P 500 is really Target and Moss. Now, we said the foundation for our trade examples, whether it's in the margin or the IRA, is number one is we're looking for that trend number 3. Now, trend number 3 is that the price is just above a 30-day simple moving average, which we use as a proxy for trend, and above the 10-day exponential moving average, which is the proxy for momentum. Now, I can hear it now. Yeah, but we're late. Yeah, but we're late. Okay? Well, we would kind of push back on that a little bit and say, how do you know that? Okay? Well, if we take a look at this just over here on the right-hand side, I want to look at this column right here. The 10HC for the 10-hole counter. So in other words, it's the green background tells us that the moving average is green. So if I pull up the chart, I look at Amazon example given, we could use any of these. The moving average on the 10 would be a green color. Okay, now the 8 there is actually saying the number of days that the moving average has been green. All right, now if I look at the 20-hole counter, HC, it's been green, the moving average, for 22 trading days. Okay, so 22 trading days. Now, the one thing is you're going to notice is in this on the far right-hand side, there's a whole bunch of breakouts all the way over here. Some of these are today breakouts. Today, continuing breakout today, testing the 2-day pullback today, testing, right? Bunch of them. Now, the other thing I want to kind of make mention of is look at the number of days, look at the number of examples we're seeing where these are just brand new green in the last, let's say, 1, 2, 3 days. We're seeing brand new in the last 2 days. Brand new in the last 2 days. So we cannot say this malarkey that there's nothing that's fresh potential bread. Fresh potential bread means potential brand new setups. Okay. Now, let's kind of speak to a couple of these for just a moment. Now, if you're looking at this and saying, who kind of created this? Well, these are my things that I've used over years. I did have help from some people over time customizing these. But remember, you can find these scripts and I share them freely right on the X page. And let me bring that up for just a moment. The X page is going to be right here. And if I went to the X page right there, now, by the way, I'm glad, Bill, you made mention of that, okay? So the MSTR, let's talk about that. Let's also bring up the coin example. Now, we know that like some energy stocks, it's correlated to oil. And it's, for example, let's say correlated to, let's say, gas and so on. Or it's correlated to, let's say, other asset classes. So if you went right to this page that I just sent to you, and you scrolled down to the first heading, okay? So I'm going to scroll down, and now what you're going to see is right at the very tippy top, the first pinned tweet at the top. If you wanted any of the RS5, 10, 21, in blue, right there's the code. Now, it is case sensitive, okay? And so anything that I showed, I just posted right here, all right? Now, let's actually go back to work, okay? Now, first thing what I want to do is I want to go just kind of, Bill brought up the MSTR. So let's take a look at what it showed. Now, how do you kind of highlight a couple of these? Well, if you want to look at a couple of these, let's click on the line and do Control Spacebar. Okay, now when I do Control Spacebar, what it should do is it actually should go ahead and highlight that line. Okay, that's how you can do it. Now, what I'm going to do is I'm going to go MSTR. Let's go MSTR first. Now, when I bring up MSTR, here we actually have one. Now, the comment from Bill was MSTR historically had been correlated to a asset class. I can't tell you which asset class that was. Can you remember what it was? Now, if you said, well, how do I see the correlation? Well, what I'm going to do is, if you don't mind, is let me show you some ways. And by the way, I think correlation is probably the least talked about, but could be the most interesting. One way to see correlation is, number one, is click on the test tube, which, by the way, this is technical indicators. Number one, go to the test tube and just type in correlation, okay? Now, the correlation is going to show up on the bottom. And if I said correlation, it's going to default to, but you don't have to have the SPX. The correlation is over the last 10 trading days, and it's to the SPX. If you said, I don't want to see what the correlation is, now if I did to the SPX, go apply and then okay, the correlation is ranked 1 to -1. Now, obviously, a correlation of 1, positively correlated to the S&P 500, 0, no correlation, and -1, well, it's like oil and water, okay? The opposite, in other words, okay? Now, if you wanted to change this, right-click on that, and I'm going to go SPX. Now, if I did, just example given, I'm going to type in coin, okay? It could be a stock, it could be to a sector, it could be to an industry group, it could be to take your pick. And what I'm going to do is say apply, click on apply and okay. And now what you're going to see is when I do that, you're now going to see that we can go ahead and just type that in, apply, and then okay. So now we actually have coin there. Now, the first thing what you'll notice is this really looks like it's a lot more correlated to coin. Okay, now this is not what I'm thinking about. I asked asset class. I can't say what that is. You can. Now, if you had something where the correlation spent the majority of the time, let's say 0.5 and above, or maybe 0.7 or high, this has a high degree of correlation where if actually one goes up, the other one might go up, and so on. Now, the other thing we could do is go to patterns, studies, quick study, and we could just say compare with. And if you don't mind, I'll just show you the second way you could see it. We're just going to go where it says custom study. And what I'm now going to do is, let me show that again, just so we can all be on the same page. Go to studies, quick study, right to where it says compare with, in correlation, and just do custom study. Okay? Now, if you pull this up, I'm going to type in coin. All right. Now, the candlestick chart is MSTR. The line chart is going to be coin. Click. Now, what you're going to notice is if the lines, it's not really lines, candlestick chart, MSTR. Line chart, coin. How do I know that? Well, in that purple color right there, we can see it says coin. Now, what you're going to now notice is when one goes down, the other one, the candle chart goes down. When one goes up, the other one kind of goes up. When one goes down, you can see they both drop. When one starts to base, the other one base. When the other one goes up, they're overlaid on top of each other. Now, if you're going to ask me, I think the correlation makes a lot more sense if you're looking at an index, a sector, an industry group, or an asset class, or a price. Okay? Now, could you relate it to stocks? Sure, to see performance differences and so on. But those are two ways in which you could actually see the correlation. Let's right-click on that, remove it. Now, what I'm going to do is let's kind of pull this up. Now, if we were to look at this, you're going to see on the bottom here, we've kind of been basing for a while, right? Now, the one thing we'd have to say on MSTR is there hasn't been a whole lot of correlation between MSTR and the S&P 500, okay? Spent the correlation of MSTR to the S&P 500. Well, you spent a lot of time lately having a correlation where it was at zero or even below zero, which means if the MSTR chart is going down and we have a negative correlation, what does that mean? Well, the S&P must be going up, hence the negative correlation. Now, you're going to notice that we have earnings right here. Now, let's kind of speak to this for just a second, okay? If we're a stock investor and we have earnings coming up, the investor might just say, I'm going to do maybe a smaller number of shares. Okay, that's one way. Second, they might say, I'm going to set a looser stop. And third, they might say, if I do a smaller number of shares, I might dollar cost average. So there's some things that the stock investor could do. And I did not make mention that they might buy a normal position and just set a looser stop. Smaller number of shares, okay? Dollar cost average, and so on. So there's things that the stock investor can do. We know that the stock investor, they're going to buy it, the shares. If they buy the shares, bigger capital outlay, no expiration, risk is down to zero. So there's pros and cons. Where the option investor, they might say, you know what, I'm going to also trade the trend, but I'm also going to say in this case, I might like to do a strategy that might have, let's say, a lesser capital outlay. You get to choose what your heart desires, what you're willing to risk. We're all different, okay? Now, what I'm going to do is, some of us might be thinking that that asset class might be reversing back to the upside to some degree. And like things like MSTR and coin might be starting to reverse a little bit. Okay, now some people say, I don't want to trade that new asset class. I want to trade something that might be correlated to that. That's what we're talking about. Now, what I'm going to do is trade number one is we're going to go to the paper money account. And what I'm going to do is I'm going to bring up MSTR. Now, if I bring up MSTR on this chart, I got to make sure we do it in the paper money account. And if we actually did this, I'm going to kind of zoom in on this, right click. And by the way, let's go back to just the last couple of days, okay? Now, if we were to look at the kind of the movement in the last couple of days, there's been a very stout move to the upside, a very strong pull and a flag. Now, This pullback wasn't very much. Kind of your very standard 5, 7, 10-day pullback. Where do we measure from? I'll be happy to tell you. You measure from the high to the low. When you're talking about the duration of time, you measure from the highest point down to the lowest point. We're not talking about the highs and lows per se. We're talking about the number of days of the flag pullback. Okay? Now, and then we're saying how many days was that? The answer is it was 7 days. And then doink, pop to the upside. Now, do we know the future? Of course not. Okay? If I right click on this chart, go buy custom, I'm going to go with OCO bracket. Now, what I'm going to do is I'm going to kind of take this. So trade number one, it's a stock trade. Okay? Now, James, why have you traded so many options lately? It's a simple answer. I ran out of money. Okay? Ran out of money. Okay? When you run out of money, you just sit on the trades you have, manage those positions, or you try to leverage. Okay? Now, tell me where that target is. You tell me where it is, and I'll type in that number. The stop underneath, though, and I'm going to try to be a little bit more forgiving. Okay? When I say the word forgiving, what does that mean? Well, we don't want tight stops. This is where looking at the ATR might make sense, the expected move, and so on. I'm going to even set the stop below that 169. Now, don't just sit here and watch me. Where would you set the stop below? Below the 176? Below the 169? Where would you put it? Okay? Now, if you're asking me? Probably set stop at 169. You set a stop at 169, it's going to push down the number of shares that you can actually do based upon the risk that you can take, okay? If you set a stop below 176, you're going to increase the number of shares, okay, when you do your position sizing. Now, if we take a look at this, if I went back and said, look, we're going to allocate $4,600. Now, by the way, that's not a bad problem to have. If the account balance actually goes up, we could actually allocate a bigger amount of cheese. Cheese, also known as capital. Now, if I did that, it's going to be about 24 shares of stock. If we set a stop below 169, which I'm seeing a lot of you say, James, set a looser stop on this. Now, by the way, the risky part about the earnings is it could gap down. So we're going to set the stop at 166.21. I'm going to type that in. And now what you're going to see in this case is dated GTC. Okay? Now, so the indicator that we talked about so far is correlation. Now, remember, I said correlation to me makes the most sense when you're correlating it to an index, the sector, the industry group, the price, the rate, and so on. Comparing it to individual stocks, sure, but it wouldn't kind of be it'd be on the lowest order of the pecking pile, okay, or pull. Now, if you take a look at this, where's the target? Well, if we actually went back to that target, the only thing above us, or could we say that the only thing? We're about ready to find out. The area above us, if we're talking about bodies, is about 187. The thing is, sometimes these downward moves, they reverse. Those that have been bearish start to go from bearish to neutral, or bearish and flip the position and they go bullish. Now, what I'm going to do here is I'm going to set a target a little bit higher. I'm going to kind of stretch it a little bit. Now, what we got to be mindful of is, if this has earnings tomorrow, limit GTC. So this is saying from 9:30 a.m. Eastern to 4 p.m. Eastern, if that stock can get above 200, sell in that window. So when is it? Is it in the pre-market or the aftermarket? It's in the aftermarket. So it's not going to go into effect until the 6th of May. Now, in the morning of the 6th of May, if you see the stock gapping up to 210, 215, could it fill at a higher price? It could. Flip side of that is, if the stock opens up down at 166 on May 6th, could it get filled at a lower price? It could. Okay? Now, I'm going to put that as an initial target. But you better believe we're going to be kind of watching to see how does the earnings react. How does the earnings help or hurt the price? Going to go confirm and send. And now notice I won't hit coin, but coin is going to look very similar to MSTR, as we saw in the correlation. Now, when I look at, if I go send, we talk about the risk of the stop, send the order, and there it is. Now, I'm just going to visually show you the coin chart as a candlestick chart, coin, and there it is. If you might say, which one is trying to kind of reverse a little bit stronger so far, you'd probably say MSTR, okay? Now, let's talk about energy. Now, let me ask you, I mean, you're here. If I were to ask you what energy stocks to you are showing a little bit of strength. Now, as I'm getting some answers back from you, I'm just going to create a list. So don't mind me. And what I'm going to do is I'm just going to make a quick list of some energy stocks that we might normally think about. And I'm just going to label these energy, and I'm going to type in these stocks. And when I get those answers back, I'm just going to kind of bring up some examples. FANG, Valero, ConocoPhillips, Phillips 66. Okay, now, okay. So everyone's typing in FANG. That tells me what you're maybe looking at. Now, MPC, got the Phillips 66. Okay, my gosh, we've got a pretty similar list here. Okay, now give me 3 more. Don't be stingy on me. Okay. Well, so now what I want to kind of do is any others. Okay, APA. Okay, Apache. Any others that we're missing? Baker Hughes. Okay, BKR. Now I'm going to type in the proxy here, the IXE. Now you might not use that. I have to use that because I can't talk about the ETFs like we do. Rachel does on today and Friday. If we could, we would just type in that. But I'm going to type in IXE for the energy index. Oxy, and thank you so much. ARC, and let's say SLB. Now, let's stop here. Got a good list here. Now, let's say save. Now, the first thing what I want to kind of look at is let's kind of rank these a little bit, and I want to rank by week percent. Why? Well, when we look at week percent, that's going to really tell us which stocks might be forming a bull flag pull. Now, think about this logically, okay? Whatever has the highest percent, doink, to the upside, when we pull up the chart, of course it would have been showing a big move to the upside because we're only looking at the last 5 weeks. No, the last 5 days, okay? Because we're talking about the week performance, okay? Now, which stock actually has the bull flag pull? Well, because I can't get Conoco to look. Oh, there it is. The one that is actually, and a lot of you said this, MPC. Well, the one that's actually showing that is MPC and Phillips 66. Now, are we saying that, hey, if I pulled up Valero, that's not a strong bull flag pull? It could be, but the ones that are, well, really ramming to the upside, if we said the top 4, it's FANG, APA. By the way, good job on APA. We haven't talked about that in a while, but it's right there. Now, super quick, if we said of these maybe 4, okay, let's say 5, I'll include Valero. They're all showing some relative strength in the last 2 weeks compared to what? The S&P 500. Any that are brand new that are showing brand new hold? Yeah, it's MPC, it's APA, it's FANG. Any of these punching shorter-term highs? Yep, MPC and FANG. Any of these that are doing a bull fleeg? Yes. Which one? APA. Gosh, you guys are like making me curious now. And which one is doing the today breakout? Right there. Now, the reason why some people kind of like this view is it just kind of takes all the different things that are taught in technical analysis for the most part and said, show me which ones are kind of doing what. Now, just real quick before we go into the chart, remember that 1 week, and if you said, where can I see this in a written down format? The week percent, it's trying to find momentum. The 1 month percent is trying to find trend. The year-to-date performance, obviously looking at the year-to-date performance. What is the purpose of the trend daily? Looking for stocks that are actually doing strong price trend relative to moving averages. What is the purpose of hold? It's a bullish bounce setup. What is the purpose of, let's say, a 20-day high? A short-term potential breakout. So remember, you can have the indicator all you want, but you want to know why, and when. All right, now let's go to work here. Just because I had a feeling someone's going to ask me that question. Now, if I were to ask you a quick question, which one do you want to look at first? I feel like some of you are saying, James, let's go look at that Apache for just a second. Well, if we go look at Apache and say, show me what you have, if I bring up Apache for just real quick, and let's pull this back up. Now, when we look at this, what I'm going to do is I'm going to pull this up with just the classic whole moving averages, bring up Apache. And if I look at Apache, here's what we have. Now, first off, do you notice anything unusual on the chart? Anything that stands out to you besides you wish you would have bought 10 days ago? Okay, I'm not saying you. It's just a question I'm throwing out there to the world. Now, first thing I notice is the big hole in the chart. Where? Well, that big hole in the chart is right here. Now, remember, on the green candles, the marker that we in our paper money account, is the closing price on the green candle. On the red one, we're going to kind of mark it from where did it gap down from to where did it gap down to. Since this is a green candle, the closing price. What do we notice here? Well, day number one, opening, closing inside that channel. We're looking at, when we say breakout, we want to see a green candle. That's number one. And two, the whole body above the line. If we have a green candle and the whole body is above the line, that meets our definition of breakout. Day number one, day number two, day number three, that's the red candle. But wait, we talked about that. When we get one down day and the prices are above the moving average, we have been trained. When we talked about the 5 dip buying potential setups, this kind of meets one of those 5. We went down for a day, intraday, sold down to the 20-period moving average. Someone came in and said, spank you very much. Bought it right off that, bounced back up, doink. Now, what we see today is today's price gapped up. It would have been traded above the high-low day. That dot is going to show even intraday, not just at the close of the day. Earnings, when do we got them? We got earnings after the market on the 6th. We talked about that, kind of how the orders fill. It's during the market hours if we do day or GTC, and we see that got the conference call, okay? Now, what I'm going to do is, when you have this, when it's kind of getting inside the channel, the path of least resistance tends to be, not always, okay, a movement to the upside. Now, obviously, if we pull this up and said, well, what about the correlation? Is the correlation more to the energy sector, or is it to the price? Well, we're about ready to find out, okay? And by the way, could you put 2 correlations as well? Whatever your heart desires, okay? And now what we see is, let me put that in correctly here, and I'll type in that, and I'm going to also put crude oil itself. Okay, IXE is there, and I'm going to type in that crude oil, and I'll use Brent as the example. Now, I'm going to type in this, and now what we're looking for is kind of say, okay, how is it correlated? So the first correlation actually down here at the bottom, energy. What do you notice? Well, it literally almost has a 1 correlation. What does that tell us? Well, it tells us that energy sector has been going up. One of the ones that's had almost a lockstep move is Apache. And by the way, could you put that on the Market Watch tab, like a correlation column? Sure. Okay. Could you actually have another correlation column that maybe actually had a price or something? Sure. Could you do correlation actually to the S&P? Sure. Okay. The answer is yes. Now, the other thing you're going to notice is it's also the Brent oil as well. So we don't really see that, oh, it's not correlated to the sector, but it's correlated to the price. It's been correlated to both. Which one actually has the highest marking right now, number-wise? It's to the sector. But still, 0.88 is extremely high correlation. Now, what we're going to do, Because some of you are thinking that you're like, hey, just options. Now we're going to go trade tab. Let's go trade off the chart, buy custom with OCL bracket. Now, what we're going to do is going to go back to the dollar amount. Let's go 4,600. 4,600 represents no more than 10% of the portfolio value for the margin account. How many shares is it? 111. Now, if I go dated GTC, dated GTC, now remember, especially around earnings, it's not going to fill in the pre-market. It's not going to fill in the post-market hours. From 9:30 a.m. Eastern to 4. Okay? So you tell me where to put the target. And now what you're going to see is the stop underneath. Now that stop underneath, we're going to set the stop underneath 38.7. Now, I know what you could be thinking. Wow, that's a really wide stop. Well, we're doing that kind of on purpose. 38.7 times 0.97, meaning less than the support level, 3%. 37.53. If we type that in, 37.53, okay, GTC, limit GTC. So good till canceled there. Now, when we go back to this, okay, so the emphasis of what we talked about here today is correlation. This week, I'm going to kind of roll out some things that I like to look at. Today, we kind of talk about the correlation to the sector, correlation to a price, correlation stock to stock, and so on the chart. I'm going to kind of show you this week, each day, kind of add a little bit more. Today's day one of correlation. This week is correlation week. Why do I even care about correlation? The answer is because it helps you understand investing ideas or in trade ideas. Well, and by the way, there might be different strategies you might look at and so on. And having an understanding of why these prices might be going up and or down. Now, what I'm going to do is I'm going to also kind of go back on the 3-year weekly chart and say, where was that resistance? The only resistance we've had above us is $46. And I'll put that initially. You might use good old Fibonacci to kind of look at the 161 target or the 200. I don't have the time for that right now, but if I could show that. I'm not going to talk about it, but I'll put that there to see if it coincides with the 46. Let's see what we got. It doesn't. 161 is even higher. It's at 51.5. Okay. So you might say, look, I'm going to set a higher target, of course. Okay. Now, we got to ask ourselves the question, is APA only correlated to the sector, correlated to the price? Obviously, it's correlated to the S&P, but it's probably not going to be as correlated as much as we see it correlated to the sector and the price. Okay. Now the comment is, is this like a swing trade? That's the idea, that the investor's buying it in a bounce and then trying to get it to go back up to the prior high and sell at the prior high. The extension target, of course, is that 161 extension. Yes. Okay. Now, any questions? Any questions? Now, the one thing I'll kind of show in finishing here, double check. If we pulled up that correlation and said, what is that correlation to the S&P 500? You're going to see that it's not as correlated to, it's only at 0.67, okay? And so, that first correlation to the sector, to the price, 0.66 to the S&P 500, okay? And that's why you want to kind of look and see if the prices move or the sector moves, what could be going up. And when you do it day after day, this is where you start getting the trade investing ideas. The other thing we covered actually here today is kind of talking about some stocks that we might keep an eye on from an energy perspective, but also we also brought up a list of stocks that we're going to be watching through this week. So keep those in mind. I think the one we kind of have to flag a little bit is maybe fertilizer. We would also say software, and we would also probably say the industry group of cybersecurity. Okay, now, I'm out of my time here today. Stay tuned. We got our next class coming up on covered calls and cash secured puts. Later this afternoon, we got Rachel teaching on ETFs. Join her as well. And remember that you can subscribe to the Trader Talks channel. Do so
It's free. And don't forget to smash that like button so that way others could actually find this content right on YouTube as well. Remember with what we talked about is done for example, illustrative purposes only. This will be the week of the correlation, how to use the correlation, creating trade ideas and investing ideas from that one study. Now, also remember this class has been recorded, so you could also watch it on recording as well. Thanks to all of you, and I'll be back tomorrow as we talk more about correlation tomorrow morning at 11 a.m. on the Investing Master Series. Thanks so much. Take care. Bye-bye.